Bitcoin, $62,808, has now jumped 50% since the start of the year and is nearing its all-time high, with much of that action driven by heavy interest in new spot Bitcoin ETFs. Our next guest helps run one of them. I want to bring in Bitwise Chief Investment Officer Matt Hougan. Good morning to you. When you look at what's been driving this price action on Bitcoin, Matt, how much of this is retail investors investing directly in Bitcoin? How much of it is the ETF? How much of it is institutions in the ETF?
Absolutely. It's a great question. We're seeing enormous demand for the Bitwise Bitcoin ETF and across all of these ETFs. And the answer is it's all of those categories. You're seeing retail investors come into these ETFs. You're seeing hedge funds. You're seeing RIAs or independent financial advisors. I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. But this has been Bitcoin's IPO moment. It's in a new era of price discovery. And I think prices could go substantially higher from here.
Let's talk about where they could go in just a minute. But I just want to go back to this idea of who you think is buying these ETFs, meaning how much of this is retail versus institutions?
Yeah, absolutely. You know, when these ETFs first launch, they're not turned on at the major wirehouses, at the major institutions. So the initial demand out of the gate for any ETF, including these, is primarily retail and independent financial advisors and hedge funds. So I think that's the primary driver. That's what we're seeing. Right. But I'll tell you, after this meeting, I'm getting on a plane to go talk to one of the largest institutional consultants in the US about this ETF. So we're going to see that next wave of institutional capital.
You did mention hedge funds, which I will put in sort of an institutional or professional category. In terms of this big move, do you think it's that money that's pushed this, or do you think it's straight retail?
Oh, I think it's both. I think it's both. It's just new demand. If you think about Bitcoin pre the ETFs, there was only a small set of investors who could buy it. Now almost everyone can buy it, and the supply-demand dynamic is just off the hook. There are 30,000 Bitcoin purchased by ETFs this week alone. Bitcoin miners have only created less than 3,000. That's what's driving the price. And it's both hedge funds and retail and that advisor community.
Obviously, you have one of these, so if you say it's going to go up, people will say you're talking your book. But if you were to say it's going to go up, where do you think it's going to go?
Absolutely.
And describe exactly why.
Yeah, sure. At the start of this year, in December, we actually published our 2024 predictions. And we said that Bitcoin would trade to new all-time highs above $80,000 a coin. Based on what we're seeing in our ETF and these other ETFs, I think we have to revise that upwards. It could be 100,000, it could be 200,000, it could be higher than that. There's simply this massive supply-demand dynamic going on, net new demand and a fixed supply, and actually a reduction in new supply coming up in April with the halvening. Sometimes investing is complex, sometimes it's easy. With Bitcoin right now, it's just about supply demand, and there's too much demand and not enough supply.
When you think about the various ETFs, spot ETFs that are out there, we're talking about a dozen right now. There's been a big question mark about whether that turns into 3 or 4, meaning there's massive consolidation, or they all remain independent, or new players emerge in the field. How do you see it?
You know, I think there'll be 6 or 7 or 8 of these that survive long term. There are 5 that are over $1 billion. We're proud that BITB is among that. We're at about $1.5 billion. So there'll be some consolidation. But make no mistake, these are the most successful ETF launches of all time by a large factor. Our ETF, which is, again, $1.5 billion, is one of the 25 fastest growing ETFs of all time. So there'll be 6 or 7, maybe 8 of these. And then there'll be variations. You'll start to see the ETF ingenuity machine come up with covered call options and other variations on the theme. But this is a big market. I think this is a $100 billion plus category. There's enough room for multiple high quality firms to play in it.
And real quick, do you expect to be offering the Bitwise, Ethereum ETF anytime soon?
Yeah, we think the door is opening to more crypto ETFs. Bitcoin ETFs have proven it's a low-cost, secure way to access the market. We're getting enormous positive feedback about BITB, and we want to be a player in every crypto category for ETFs.
Welcome back, viewers. As you just saw in the recent CNBC video, Bitcoin is absolutely surging. After watching that footage, you're probably wondering, what's next for Bitcoin? Will this epic rally continue? According to Bitwise Chief Investment Officer Matt Hougan, the answer is a resounding yes. Hougan predicts the launch of Bitcoin spot ETFs marks a new IPO moment that could send its price dramatically higher. He believes over $100,000 per Bitcoin is easily achievable in 2024, with the potential to even hit $200,000 plus. So what's driving this unrelenting Bitcoin bull run? In short, unprecedented demand against limited supply. These new crypto ETFs are opening the floodgates, allowing mainstream retail investors, institutions, and hedge funds to pile into Bitcoin like never before. Thank you for watching another informative video from InvestMinder. Don't forget to smash that subscribe button to stay up to date on crypto news and money-making insights. Please note we are not professional financial advisors. This channel is purely for your entertainment. Now let's analyze Hougan's bold predictions and the factors he says will continue fueling Bitcoin's parabolic rise. Could we really see $200,000 plus per Bitcoin in the near future? In the CNBC interview, Matt Hougan makes an interesting comparison between the launch of Bitcoin spot ETFs and an IPO moment. He explains that these exchange-traded funds are rapidly opening up crypto access to mainstream investors in a way that has never been possible before. Up until now, only a relatively small subset of sophisticated traders and institutions could gain direct Bitcoin exposure. Between needing to set up a crypto wallet, learning secure storage protocols, and navigating complex exchanges, it was often an intimidating prospect for novice investors. Many traditional brokerages didn't even offer the option. Enter Bitcoin ETFs, which trade on public stock exchanges just like regular stocks. Now everyday retail investors can simply call their advisor or log into their existing brokerage account to buy crypto. It's familiar, it's safe, and it opens the floodgates to billions in fresh capital. And we're still just getting started. As Hougan points out, the ETFs only recently launched and major brokerages like Fidelity have yet to fully embrace them. Over the coming months, he expects a tidal wave of new ETF investment as wirehouses flip the switch. If buying demand is already overwhelming available, Bitcoin supply this much, imagine the price impact when traditional finance jumps in full force. Hougan compares today's landscape to the early days of the internet, a revolutionary technology going mainstream right before our eyes. Much like investors wish they bought Google stock when the search engine first took off, he suggests this could be the last chance to get Bitcoin at reasonable prices before exponential growth really kicks in. If demand doubles or triples in the near future while Bitcoin's new supply gets cut in half this April, basic economics state that prices must skyrocket. That sets the stage for a run well above the current all-time highs. But how high can this go? In the interview, Matt Hougan makes some pretty wild predictions about how high Bitcoin could go in this current bull cycle. As a refresher, he foresees over $100,000 as highly likely, with realistic potential to reach $200,000 per Bitcoin or higher before 2025. What analysis is driving these ambitious numbers? Hougan boils it down to basic supply and demand economics. He estimates that last week alone, the new spot Bitcoin ETFs scooped up $30 billion worth of Bitcoin. To put that into perspective, that's 10 times more than what miners actually produced in new coins over the same period. This buying pressure is astronomical, and it's showing no signs of letting up anytime soon as the ETFs continue exploding in popularity. On the supply side, new Bitcoin creation is about to get cut in half. Hougan references the upcoming halving event expected this April, where miner rewards will drop 50% seemingly overnight. Combine soaring demand with slashed production and you have a recipe for fireworks. History shows us that this supply shock dynamic has triggered massive bull runs in the past. The last halving preceded Bitcoin's jump from $10,000 to $60,000. With industry adoption far more mainstream this cycle, Hougan believes the coming boom could be even greater. When you factor in estimates that only 20 million Americans, less than 10% of the adult population, currently own crypto, the growth runway is tremendous. For comparison, over 50% of Americans own stocks. As that gap closes over the 2020s, the pool of potential Bitcoin buyers starts looking limitless. And none of this accounts for the growing wave of institutional interest. Hougan reveals after the CNBC interview he's jetting off to speak with major investment consultants about adding Bitcoin to their client portfolios. Giant pension funds, university endowments, and sovereign wealth funds control trillions of dollars that could make its way to cryptocurrencies this decade. So while short-term bubbles and crashes are likely along the way, Hougan concludes the long-term stage is set for dramatic, sustained growth. Buckle up, because if demand keeps accelerating against fixed or declining supply, Bitcoin's future trajectory starts looking almost vertical. As we analyze Bitwise CIO Matt Hougan's ultra-bullish Bitcoin predictions, a natural question arises: how enduring will this growth be? Many critics have called Bitcoin a speculative bubble ready to pop. So what makes Hougan believe otherwise? In the interview, he acknowledges short-term fluctuations are inevitable. But zooming out, he sees all the hallmarks of a structural megatrend like the internet taking root. And history shows us that ground floor opportunities in paradigm-shifting technologies can generate life-changing growth for decades. Hougan points to multiple indicators that Bitcoin and crypto have hit an inflection point towards mainstream adoption, similar to 1995 internet stocks. For one thing, consumer awareness and ownership have exploded over the past 2 years. Crypto wallet growth also continues accelerating worldwide. And perhaps most importantly, serious institutional dollars are just getting involved. We can already see how quickly institutional interest is surging. In just the first months after launching, assets under management in Hougan's BITW Bitcoin ETF have ballooned to over $1.5 billion. He reveals his firm's ETF is now one of the 25 fastest ever to reach that AUM threshold. And cumulative capital across all spot Bitcoin ETFs already exceeds $6 billion as of February, with much more likely on its way. But won't the ETF excitement wear off, especially if we enter a broader market downturn? Well, Hougan notes that initial ETF launches historically draw primarily from retail investors. The fact these products are seeing record-shattering growth while major wirehouse platforms block access hints the institutions are still largely untapped. Imagine the influx of investment if firms like Fidelity, Schwab, and Morgan Stanley flip the switch. Hougan estimates we could see over $100 billion in the Bitcoin ETF ecosystem alone in coming years. And as the on-ramps keep improving, why would the momentum slow anytime soon? Of course, critics have falsely predicted Bitcoin's demise many times before, but Hougan clearly lays out an alternative vision, one of a market that's still only 0.01% penetrated with exponential room left to run. For investors who can stomach the volatility, he suggests now marks a once-in-a-generation opportunity. The question is, do you see the transformative potential? Besides just Bitcoin, Matt Hougan hints that significant ETF-driven crypto growth could spread to other leading tokens like Ethereum in the near future. Hougan's firm Bitwise currently only offers their flagship Bitcoin fund to investors, but he reveals they are looking aggressively at expanding into an Ethereum ETF product by end of year. This anticipates similar trajectory and impact as the Bitcoin ETF phenomenon. Demand is already overheating for Ether tokens as development platform activity explodes. Now imagine that combined with a convenient mainstream investment vehicle drawing retail and institutional dollars. The Ethereum growth story could just be getting started. But why shouldn't investors expect this crypto innovation and adoption momentum to permeate the entire digital asset ecosystem? Already, also-rans like Solana, Cardano, and Polkadot command billion-dollar market capitalizations each. When more casual investors start allocating 2 to 5% of portfolios towards crypto, a rising tide could lift all boats higher. However, Hougan cautions it will still take years before regulators approve ETFs or funds tracking smaller alternative cryptos. For the near term, expect Bitcoin and Ethereum to continue dominating inflows. Looking at the bigger picture, he believes we are witnessing the early stages of a broad and lengthy transformation. After the internet itself, crypto and blockchain technology could be the next great computing platform, overhauling digital architecture and unlocking innovation. We're seeing Web3, DeFi, NFTs, and the metaverse built in real time with cryptocurrency and tokens powering these decentralized ecosystems. With each major industry rollout and integration, Hougan sees another wave of users, activity, and investment catalyzed in the decades ahead. If the overall crypto market cap ends up reaching even 50% that of gold's $10+ trillion, well, you can do the math on how high prices could ultimately trend across top 10 coins. So weighing all evidence, Hougan doesn't hesitate in declaring current conditions the perfect storm for explosive crypto growth. Between favorable macroeconomic trends, generational wealth transfers, expanding digital everything, he concludes the stars are aligning for blockchain's graduated evolution into a mainstream pillar of global finance. Those paying attention now stand to disproportionately benefit. So which vision of the future do you see unfolding? There you have it, viewers. A comprehensive breakdown of Matt Hougan's bullish perspective on the crypto market outlook. In his view, Bitcoin and Ethereum poised to post parabolic growth thanks to a perfect storm of rising adoption, favorable economics, and innovation momentum. While critics warn of bubble risk, Hougan makes a compelling case for blockchain technology transforming global architectures much like the internet revolutionized communications and commerce. If so, the price implications for top cryptos could be astronomical in the decades ahead. Of course, only time will tell how fast and far this growth materializes. Major down cycles are likely in between, but for risk-tolerant investors, he argues the long-term upside dwarfs short-term volatility. Just like early internet ventures, no one can predict which specific crypto applications will emerge as dominant. But broad blockchain integration now appears almost inevitable. By judiciously investing in top tokens like BTC and ETH at this stage, strategists like Hougan suggest fortunes stand to be made as this all plays out. The bottom line, while crypto remains highly speculative, conviction in the underlying platform continues gaining momentum. There may be no better asymmetric risk-reward bet today than diversified crypto exposure. Thank you for watching.
Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.